Hello traders, welcome to a post-session review. Today is Tuesday, September 3rd, and day past the Labor Day weekend, and the also hurricane is moving away, so the weather is better. It didn't get too bad here in Miami. Just some wind, a little bit of rain, and more than anything, it was just a relatively boring day. People get a little wacko with the storms here, but that's okay. Getting two trades today, one winner, one loser. Net 55, the winner weighed the loser, and that was nice. We're still fighting with this account here, and tomorrow will be the live stream. Hopefully we'll do better tomorrow and start finally turning this ship around. We've been battling back and forth with some good days, bad days, but we seem to be stuck around this this level here of 24,000-25,000. So hopefully we'll come out of that soon. What a fight it's been, and I'm enjoying the challenge. But man, we definitely would like to see things change in a better direction, so we can start talking about and start seeing some scaling in and how we achieve that. The range of this market definitely favors scaling in and averaging in better positions, kind of like what we do on the longer term. It'd be nice to do that on intraday as well. But we need to get the account in better territory before we start doing things like that. Nonetheless, we're going to keep fighting, and we're going to keep working it out here. So for the sake of transparency, $55 a day, 55 realized here. The P&L is 24.7217. 55 here, 24.7217. So we're penny for penny still matching here for the sake of transparency, and for the haters as well. As far as coming into the market today, I apologize for my son crying in the background. We had a gap here yesterday. We saw that whatever happened on the weekend favored the longer term. We'll get into the longer term here in a little bit, because I wanted to also show you how we set ourselves up for identifying what's next. Where does price have to get to before we start looking for trades, so we don't find ourselves getting bullied by price in any particular area that's not favorable from what the market is working towards, and also as well as risk tolerances. All right, so coming in here today, we saw that this is where the gap was to the downside. It ended up filling. We do have some ABCDs up here. Doesn't really matter all that much, but we got to ask ourselves, okay, so what is the expectation? When we got to the market today, the market was around here, so we have to tell ourselves, okay, so what are we looking for, long or short? Where's the main swing? And although we have some this main swing here favored yesterday, we still were within the confines of that main swing. So no matter whether you looked at this as a high and this as a low, the gap was somewhere in the middle. We had some complex corrections here. Once price broke below this, we knew that we had an expectation of a new structure low. We did have increase in projection. We had definitely increase in momentum, and our main swing turned out to be from here to here. Moving into the day, this is a rather large swing to deal with from a risk standpoint, from a small account standpoint. To us, okay, so what's the market doing? So we start drilling into the smaller term order flow. We see the market produce a high here, a correction to here, another high here, another correction here, and then a complex correction into another new structure high and the most immediate of order flow. So the intraday order flow, today's order flow, was producing new structure highs, higher lows, and new structure highs. Once the market broke here, we already had what was called realignment of the order flow with the shorter term order flow. So we now feel better about looking for shorts as this low was taken out here. Okay, once that low was taken out, we can see that we already had also a proper correction followed by a retest, followed by a correction here, and then another weak new structure low. So we have here what's called a follow through, another new structure low. And then if we look at this correction here, we can see that we had an expectation failure to the upside, right? Because once we corrected from here, retested, and came here, that made that this was a lower high and this was a new structure low. Once we took that out, so we had an expectation failure here, okay, and then we have price continue to come here, move up, come down, make another test of these lows here, followed by a complex correction to retest the highs. And by the time the market was getting ready to open here, price was working on, and market achieved a new structure low, which had us looking for overall lows. Okay, we had realignment of the order flows, we had realignment of price working towards this clear high, this clear low, which is part of the slightly longer term. We drilled into the shorter term order flow. We were met with some expectation failures there, but overall the market kept working towards price action to the downside. And once price achieved the close down here, we have realignment of this regular order flow here, followed by a series of very complex corrections, some choppiness, some range bound price action, eventually price making that new structure low here. So once price started moving up here, we did have an ABCD that extended a little bit past the upside here. This was my area of interest. Unfortunately, I did not get a really great rotation, just fell a little short of it. Thought price might give me an opportunity to give me some better return. As we can see here, I really kicked myself in the butt by not getting the aggressiveness of getting in there. And I missed that trade. It was not an entry signal for me. Could have been more aggressive with it. I didn't, and price sailed on without me really efficiently. So once price got back here, we just really never really got a proper correction at all. Then I started requalifying the order flow when we did start getting some proper corrections. We can see that the market here did not achieve a proper correction. Also did not achieve a proper correction, but we can see that the 38% was not hit there. But we can also see that in this sorry guys, in the shorter term order flow right here, we were in fact getting some proper corrections of all these swings. Unfortunately, price did not correct into an area of interest to get me into any of these trades. So once price kept respecting the shorter term order flow here, we had a 100% correction here, followed by a weak new structure low. We had a nice rotation here in an area where the sellers had been actively trying to overtake the buyers, and here we had a slightly better price. So I got short here on that shorter term order flow that was being respected, and sure enough, once price came over, almost got to the break-even point, and I did not. And I took a full loss there of, let's see, I think it was 26 or 27 points or something like that. 25 points. I think it was 26, the actual number. So then price was coming up here. I was not looking for the long here initially. After all, we had not achieved a proper correction on the main swing yet, so I had to keep extending the order flow expectations for a new structure low. We did get the immediate new structure high expectation failure here, so I was not comfortable looking for the long here because the expectations of the new structure low, and I wasn't thoroughly convinced that the order flow was going to continue to head higher after I seen the buyers trying to come in here and then getting handled. So I did not feel good about the long here. That was not a trade that I was looking for. I was mainly looking for shorts. Once price came up here and really piled up here and got past this area, I felt there was a little more towards the buyers, and now I needed to consider, looking for longs, as this area right here gave me a different insight that I originally had here for the buyers. Okay, so this area here, after the buyers were able to come up and achieve this, and the sellers be somewhat ineffective here, told me, well, maybe we're in for a deeper than expected correction, because what would be the correction from the order flow here? We have increase in momentum projection to the downside. We're expecting a shallow correction to the upside, a correction, not price coming very deep at all. Okay, so that's why I was not eager to get long here. It was in line with the most immediate of order flows, but it was against the overall flow of the market, so I was hesitant to get long here. But once price came up here, I saw this was also an atypical move from the buyer, something that I did not expect. Okay, and price had gotten past a 50% ratio here, which tells me that we penetrated that past that pivot of a market that if it was very strong to the downside, it should not take place. So as the market continued to push him down here to this area, I saw that the market came back up here, confirming the fact that the buyers did want it and were very capable of possibly moving price higher. So I needed to find a way to participate in that most immediate strength with a reasonable risk reward, and then see if I can get a complex structure to the upside work, and then look for shorts. Okay, kind of play both sides, the immediate and the intraday order flow. So once price achieved an ABCD to the downside here, and I got the rotation, boom, I entered on that ABCD. At that point, my back pattern here was already on the radar, but I didn't want to miss the opportunity. I didn't want to have price pass me up like it did up here. That one hurt. So I wanted to get a little aggressive and take the long there. It wasn't an area where the buyers have been defending and absorbing really well. As you can see here, it was my area of interest, slightly above. But I also knew because of that I needed to be smart and not just put my stop loss right below that most immediate main swing, as this whole area was an area of buying, and I had a bat pattern here that was completing here. Now it is a weak bat pattern. I'm going to go into that in a minute, because I also want to address a pattern that somebody identified within this same order flow earlier today and put it on the thread. And I just want to use, I want there to be a lot more caution, a lot more respect to how we are putting these patterns into the price action. And I'm going to give you all some guidelines that I find very beneficial and that add strength of signal to your pattern. It's not about, it looks like an M, it looks like a W, let's see if it qualifies somehow, and let's see, oh, it's a bat, or it's a garly, or it's a crab, or it's a butterfly, let's trade it. There should be some general guidelines that you should use to qualify these patterns from an order flow perspective, as opposed to just some ratios that come together, within a M or W type of situation. So let me just cover the rest of this trade, and then we'll get into the a little in-depth, more in-depth on these patterns. And I know we haven't spoken about patterns yet in great detail. We see them in and out, but there's some certain very basic, very strong recommendations that I personally would urge you to consider when you start putting these into the chart, so that they at the very least have better strength of signal, better value, and you can feel a little more comfortable about trading them. Okay, but we'll get to that in a minute. As price started working here and started going against me here, I honestly thought I was going to be taken out, but the pattern came down to the point, and then we had an immediate absorption that gave me some confidence that perhaps this is going to work out. So in all reality, we have to understand that the expectation had failed, that my trade's expectation had failed, but because the stop needs to go below the main swing or behind the strongest structure that's nearby, I decided that I needed to give this trade a little more room. I needed to give the area a chance to withhold, especially since I had a pattern that was completing a little lower. So my stop was below this low here, making the risk slightly larger than I wanted to. But because of all these factors here, I did not get aggressive and trail this or turn this into a rescue mission, because one, I didn't have the room for it. Two, I was looking for price to react to this area better, and I gave the market that room, and I gave the pattern and the order flow in this area that respect, and it ended up working in my favor. But I'm gonna go into why this pattern is weak in a minute here, to give you guys a better sense of orientation when you decide to use these patterns into the order flow. But anyway, how I chose to manage this trade was to be a little more lax with it. Okay, I immediately drew a ratio of the pattern itself here. My entry was here, so I knew right away that I could not get to a break even here. I'm just asking for trouble, guaranteeing myself a stop out or a break even trade. I might as well just get to just take profit if that were the case. But by having all these things worked out ahead of time, it wasn't an emotional conflict for me. It wasn't something that I was letting whatever strength and weakness was developing here influence my decision making. I made all these determinations ahead of time so that it would be more mechanical and less reactionary or emotionally based. Okay, remember, I'm against the overall expectation. I'm against the most immediate strength of the market. I have order flow realignment from the intraday expectation and the most immediate expectation. I have all these things working against my trade. The only thing I have here is an area that the buyers have absorbed well, bought off of. I have an ABC decompletion here that the market's extended past. I have an expectation failure here. I have all these things that are telling me that I should be very aggressive with this. Instead, I let all those factors not deter me from what I had already predetermined, and I told myself that I was going to give this room. I've already accepted it as a possible loss. It wouldn't have been pretty, but I'm not here to get bullied out of a trade. I'm not here to you know, let the price action dictate how I'm going to manage my trade. Okay, one thing that I did know is that I wanted to get to a break even and minimize some of those compounding risks that were starting to work against me and eliminate the risk from my trade. So once price got to this area here, which is the break even of the pattern, what I did was I reduced some risk to below, okay, the swing here. Okay, and then once price got to this area here and price started going up higher here, and I got into this area here, I felt confident about locking in at the profit target of the pattern and letting it go. Okay, not to make up the previous loss, but because I was looking at this pattern, I was looking at this, I was expecting price to come up from it, from a one-to-one to the upside in general. Okay, but I was working against the overall strength of the market. Price was testing this area here. The market had a hard time pulling above this. I'm against the overall expectation. I'm against the most immediate expectations. So I needed to be somewhat aggressive and lock in price somewhere. My two choices were simple. I could either lock in price at the 38%, okay, or I can lock in at the 618 of the pattern. Okay, so I decided to break to get to the lock in at the break just slightly before the break. The profit target of the pattern, thinking that I would at least not be able to give that back. And if I got taken out, I got a retest of the lows. Depending on how the order flow looked like, depending on what had been achieved, I can then position myself to get into another entry. So I got taken out there, and price came down, and eventually price danced around a little bit. But price came up and tagged the ABC to the upside here. That's where I would have started trailing. That's where I would have ended up taking profit. Ultimately, it worked out the way it did, and I'm fortunate I was able to make up the 25-point loss and put some money in the pocket. This here was a 37-point winner. As you can see, we have that tendency to see the winners be bigger than the losers, and that's great. Here it wasn't fantastic, but it was nonetheless, it was a pretty good and solid trade. Now, when it comes to these patterns, okay, I'm starting to see a little more here and there, people forcing these things into price action. So why do I say that? We can see here in the thread, we're not going to single anyone out, but we can see that, you know, somebody identified this potential pattern here, and they picked this as their anchor leg X to A. Okay, in all honesty and in all fairness, that's no different than picking this point or this point or that point. It lacks proper structure. Let's keep in mind that an anchor leg has to be off of a main swing, okay? And since this leg here, this clear high, clear low here did not achieve a proper correction, it was improper to use this as the X to A leg, okay? That had not achieved anything, okay? So because it has not achieved anything off of a clear low, clear high, the last thing we had here was this was a clear point, okay? We'll go back to my chart now, but we have to make sure that when we are using these X to A legs, these anchor legs, that they are off of a main swing. If they are not, then you're forcing that pattern into price action, okay? So now, having said that, let's look at that on the chart here, okay? That's the same swing here. This is where that pattern was taken into account, and we can see that over here we did not achieve a proper correction, so we had not established a proper leg, okay? Not to mention that this is a retest here, right? So we do not have an expectation that either played out or failed. This is a new structure high, so there is a new structure high here, and that is a proper anchor leg starting point, okay? But we can't just erase all that just because it looks pretty there. That is the main swing, because then how do you determine the difference between this one or this one or this one? The structure is the same. It's just a pattern off of a clear low, clear high you use that has no clear delineation whether it's a main swing or not, because nothing has qualified, okay? That's an important fact to keep in mind, okay? So when I say that this was a weak pattern, it's a similar pretext, right? But with a slightly better foundation, right? It's still a weak foundation, but it's stronger than forcing it into the price action. Because remember how we said the price had to have a new structure high or a new structure low, or have a proper main swing. Okay, we know that this was a clear point here, and then as price came down here, we know that price achieved a new low here. But when price achieved a proper correction of the 38% here, then we automatically knew that 100% certainty that this was our overall main swing, and that made this the etched in stone new structure low. That can be a good starting point for an X leg, a proper anchor leg. The only thing I don't like about this pattern here is a pattern that you could use definitely for confluence, right? We use them all the time, but it's against the overall market expectation, right? What is the expectation for the market to continue to press lower to make a new structure low? Okay, so the fact that we use a good anchor leg here, this pattern would have been a much more valuable pattern to me if the D completed up here. Okay, now the D does not complete up there, because as we can see, price got to the 50%, did not close below here, so we don't have anything really definitive here from a bat pattern or Gartley pattern, and the the larger scale, the X to A, B, C came really down here past the 78.6. You know, I know that this is one of those potential Gartley patterns that Scott still sees this as a valid pattern. I like to qualify mine a little more strict scale, and have the price respect some of these ratios a little better. So, this is, in my opinion, a raggedy bat. We got slightly past here the 50%. We got slightly past the 78.6. This is fine. But the only thing you really have here is an AB equals CD confluence with an overall expectation of a new structure low. Okay. If you were to work with the bat in mind, that the bat may play out here, then you would be looking for a short somewhere in this general area here. Somewhere in this general up here, we have a we have on this ratio right here, so you can see if you look straight across the left, 95, that needs to be somewhere in the 88% range there. That's why I have the rectangle on the 88 there. And then the higher end of it will be on the 161. We see that we have there 165. So somewhere in this rectangular area here, you would expect you know, a really nice risk reward to the downside. Are you trading a bad? Are you trading a godly? It's one of those in betweens. You know, nothing really was respected with a whole lot of certainty. So it's one of those things that you could have one, you could have the other. I don't like my patterns to be wishy-washy like that. I like the pattern to hold some sort of overall structure and identification. It's like a confused person. You don't know who you really are. It's always nice to deal with people who know who they are, where they're coming from, and where they're going, right? That's kind of how I see these things. But this was a nice little pattern here that I used could use to get into confluence here. I did see strength building on the buying side. The sellers should have been able to get more done here. I saw overall the buyers achieving more from an absorption standpoint. They really made a nice accomplishment here. And then this showed me that they were not done yet. So I felt good about the long here. I knew that the risks were added, and I knew that I needed to be more patient with it. And with more patience in this particular time, it wasn't a time patience, but a tolerance patience of price moving against me. And that's what I ended up doing. I hope you guys understand now the difference between a properly structured pattern and versus one that you just force into price action because it kind of looks nice, kind of meets some ratios and stuff like that. But if that X to A leg is not a strong leg, then that adds a weaker strength of signal to your pattern. Doesn't mean it's not going to play out. It just means that it's a weaker pattern, and that's basically it. It just doesn't mean that it's going to play out or not. But I like to work with patterns that fit the order flow better, that have a solid X to A leg, and I hope you can understand why this anchor leg here and why I refer to this as a weaker pattern, even though it played out very nicely. It's a weaker pattern because it does have a properly structured anchor leg. However, the pattern does not fit the overall order flow expectation of the order flow of the real anchor leg that's in play here, which is this one. Okay, so this is just a minor. We could have used this. We use these all the times in confluence to enter in the D's, but the D entry here is against what? The expectation, and that's what I mean by it's a weaker pattern. Doesn't really fit the overall market structure and order flow, but nonetheless, at the very least, it does have a pretty solid anchor leg because it's formed off of a properly formatted new structure low and a proper correction of some kind in this particular case. All right, because it achieved a 38%. Had it not achieved the 38%, and had it been somewhere down here, we have the same situation as this before, right? We have nothing. We have nothing that's qualified. We have no proper main swing identification, and because of that, we have nothing that we can work with from a harmonic point of view. Okay, there has to be a qualification somehow and validated somehow by ratios. All right. As far as the longer term, we said we were going to talk about the longer term here for a little bit, and we are. So we can see that it was Friday. I was in with quite a few contracts. I also was a holiday on Monday. There was a hurricane on the horizon. There were tariffs that were going to be imposed. Maybe yes, maybe no on Sunday. All these things had me not wanting to stay in this trade, particularly over the weekend. Although if the tariffs went in play, that was going to be good for my trade. I really don't know whether they did or not. I haven't heard. I've been a little disconnected because of the storm. However, had I been able to stay in this trade for, had I would have been able to stay in this trade, it would have been an amazing return, and this would have been the break-even point of the overall trade and pattern. I would have locked in half of the distance because I'm not really trading the pattern, but I use the pattern in confluence. Okay, this is the difference between a properly structured pattern that fits the order flow, the entry, okay, that adds strength of signal value, and it does fit the order flow. That's the difference. I hope this picture right here ties that together. Okay, properly structured anchor leg fits the order flow, D confluence, we enter at D 9 out of 10 times. In line for a nice correction. So now as I'm pushing forward, one of my partners here were asking, well, Damien, on the longer term, what are we looking for? What, where would you get long? Where would you get short? So a couple of things are happening here is that, I'm not in any trade, but we always want to have what's next on the horizon, right? So when price gets there, you're not reactionary and you can have some areas identified, okay? So we know that on this pattern, the profit target is here. We also know that on the most current swing, price did achieve a 61.8%. So we can assume here that we have a potential Gartley pattern that may be developing, or an ABC to the downside. All right, so that would be here, here, okay, 78.6, somewhere in this general area here. I had already drawn the fib out, and then 127% extension would be somewhere down here, in line with the 78.6. Okay, so the market is here. What am I seeing from a go long point of view? So now I extend this back down because that's what's in play right now, right? This pattern right here, we have a potential back-to-back pattern here. So where would I look to get short? I will look to get short somewhere here, which would be an aggressive C sell in an area of great structure. So it'd be great if I had an ABC into this area here, or some sort of a crab pattern or butterfly pattern that completes there. That would be amazing. Or simple ABCD, or just price drifting into this area would be good enough for me to consider taking the aggressive C sell. Okay, and as price reacts to this area favorably, we can see that we have much more better selling territory up here. That will be in line with what we're looking to achieve here. And then from a long standpoint, we know that this pattern will complete somewhere around here. The profit target of the pattern of the butterfly is somewhere in here. So that adds an area of confluence. That would be somewhere in this general area right here for the long. And looking left, we see that we have plenty of nice buying absorption that takes place in and around this area. Look to the right at the edge of that triangle of the Gartley. These would be really good areas to get long from this area here, or short from up here, with stops above and some add-ins around here and here, as well as here, scale adding in here, getting in here, and then adding to our trade here. Now if we do get long here, where does our stop technically have to be? Okay, our stop technically has to be at the very least down here, but at the end of the day, this is the X to A leg, right? Which means that we have a shorter term expectation value here, which makes the main swing from here all the way down here. So minimum swing has to be, minimum stop placement would have to be here, okay, on the D, because now we're trading the pattern here, and the expectation will be for a new structural high. So this D completion here fits the order flow so much better than a C, aggressive C sell here, okay? So keeping that in mind, these are the areas that I'm probably most interested in taking a trade. Short will be here, and long will be somewhere down here. I hope that brings a new level of clarity and insight as to how we predetermine these areas ahead of time and wait for price to get to these areas, how we use harmonics to kind of help us identify these areas of interest, and how to use these patterns more correctly as opposed to trying to force them into the order flow. There is a live stream tomorrow. Very excited to share my session with you all. I hope that I address the trolls and the haters in an appropriate way, as opposed to letting emotion, frustration set in and lashing out to them. My goal is to never do that, but it's quite frustrating when you put a lot of time and effort into something and then somebody comes in and says something that just makes no sense and tries to pollute the minds of those that don't know any better, take advantage of the vulnerable. Something that really burns my ass, because it's something the industry has done to all of you. in the spirit of mastery and taking control of those emotions so they don't become a part of your trading or your everyday method of operation in life or in trading. I took a step back from it. I let the Jedi in me process all that and think about which would be the best way to address that. Still have my lifesaver in my hand, but I'm, I think I handled it in the appropriate way. Nonetheless, thank you guys very much for the support. Thank you guys for your explanations. They were very detailed, very good, and that's when I knew that it was a personal attack versus somebody that just didn't know and was seeking knowledge. Is because when the knowledge was provided and it was accurate and proper and explained everything, they continued, and then somebody else joined in. And that's how I knew it wasn't a knowledge-seeking question versus more of an attack. But that's fine. The more you do, the better you are. They may be one of those people that are selling garbage, and I'm putting a small dent in there maybe, and that frustration made him lash out. Who knows? Who cares? We're here to grow together and learn from each other. I learned from you guys, and I appreciate your posts, and we're going to keep doing this, and there's not going to be any discouragement from the peanut gallery in anything that I'm doing. So please do not worry about that. Thank you very much, and tomorrow we'll do this again on the live stream. Good luck and good trading, guys.